Felix here. Anthony Noto gave us some hard, cold facts yesterday about what the student loan moratorium end means for SoFi's stock. When I will walk you through what it means, I'll give you revenue estimations, profit estimations, how to trade it potentially, and lots more. So stick around till the end. Let me kick it off by giving you the man himself, and I need you to turn this audio on.
SoFi shares coming off their best week in nearly 2.5 years. The stock surging as the newly signed debt ceiling deal included a restart to student loan payments. Our Bob Pisani live at the Piper Sandler Global Exchange Conference for an exclusive interview right now with SoFi CEO Anthony Noto. Bob, take it away.
All right. Hi, Scott. Good to see you. Anthony, thanks very much for joining me. I just want to follow up on what Scott said right there. Congress has ended the student loan pause. Students are going to have to start repaying their loans. What does this mean for you?
Well, first of all, it was really important that we gave people the relief over the last 3 years not to have to pay their federal student loans. They could deal with COVID and the pandemic, but that's been over for about a year. So we really thank the representatives in Washington for making that bipartisan decision. I think now what it means is consumers that have federal student loans should look to refinance. We can really help them out. If they have interest rates that are in the high 6s, high 7%, we can save them money. If they have a term of 10 years, we can help them lower that payment. So someone has 7.
Okay, that's kind of what I wanted to show you to start with. And he gave us a number at the conference, not actually in this interview, but at the conference. And I want to play you and walk you through what that really means so you understand it. So let me give you the hard, cold facts here. So he mentioned a number yesterday there's a whole conference with terrible audio, so I won't play it for you, where he essentially said he thinks they're going to go back to 2 billion in loan origination per quarter, which is where SoFi was in 2019. So in 2019, in Q4 2019, they generated 2.4 billion in student loans. Okay. Now, he also mentioned, by the way, that he thought the total addressable market for student loans in their bracket, so the higher income 100K plus people, is $200 billion. So there's quite a lot of that money to be had out there. Now, right now, and I think this is really the crux of this, right now, SoFi generates in loans, so I'm going to draw a little chart here. This is now. This is $3.5 billion in loans, of which student loans are this little bit down here. That's student loans. And that's 0.5 billion only. So it's fallen off a cliff from the 2.4 billion originally to just 0.5 billion right now. Now, what happens if you change the 0.5 billion number back to 2 billion or maybe 2.4 billion? Well, you put on top of the present revenue a bar that's almost as big, it's 57% on top. This is the new potential that he's guiding towards getting back, and doesn't take a rocket scientist to figure out that that's pretty significant. So how significant is it? And what does it mean in terms of revenue? Well, let me walk you through that as well. So make a little bit of space here. So my revenue estimates here, and these are, estimates, this is not a promise, but if you look at revenue, I would say that this will add about $100 million. This is per quarter as a base case. So this is my base case in addition to what they have from all the other stuff going on. Now, if you wanted to be more bullish on it, and what will be more bullish? Well, more bullish would also mean that they're able to cross-sell and all this kind of stuff and get towards the higher end of the 2.4 billion loan origination where they were in 2019, and that would take revenue potentially to 200 million. And this is probably plus. Could be a little higher even. Maybe not in the first quarter, but in like quarter 2 or 3 or 4. Now, in terms of, and that's pretty significant, right? Now, in terms of profits, and they use EBITDA, not a measure I particularly like, but we got to stick to with what people are using. So again, from a base case, and from a bull case, if we look at, actually, I did it in terms of earnings per share, which I think makes a little bit more sense. But no, so I can work that back here. So that would be about 40 million plus per quarter bear case, and bull case about 100 million plus per quarter. So in theory, this could add 400 million plus profits, net profits to SoFi. Now, if you are looking at my bullish numbers here, so there's a little bit more of the optimistic case, that profit number here, that would in itself convert to about a positive EPS, earnings per share, which is really what matters, of about $0.4 per share. So suddenly this is a profitable business, even if the rest of the business doesn't do anything. So this genuinely is life-changing for SoFi, because SoFi has managed to somehow survive the complete annihilation of its business. I mean, previously, these 2.4 billion in loan origination was almost the entire business. There really wasn't any much else to it. Now, I hear a few of you mumbling, yeah, but will they refinance? Rates are so high. Well, they're really high for student loans as well. These are student loan interests at the moment. Undergraduates at 5%, graduate professionals at 6.5%, parent graduate professional loans at 7.54%. Do you think they're going to want to refinance? Yes, because people refinance for the wrong reasons. People often don't refinance because they get their rates lower, although that's possible. But they refinance because they want to make their payments lower. So they're stretching a 10-year federal loan into a 20-year SoFi loan. In the long run, that makes no sense. You're going to end up paying a lot more. I really wouldn't do it. But as a SoFi shareholder, it might be wonderful for SoFi. That's one thing. And you have to bear in mind with SoFi, you can refinance today and you can refinance again next year and the year after and the year after. There's no payment penalty, fees, nothing. They don't mind you doing that. So that's pretty good. Now, what about something called income-driven payments? The Biden administration has put this thing out that basically people on low incomes qualify for this. Well, SoFi clients don't qualify. They've got too much money. You need to have really very, very, very little money to qualify for the income-driven payment. It's just above the poverty line. And two more things. This is, I think, a quote worth framing, 200 billion TAM. And today, SoFi sends me a press release saying, we've come up with something amazing, the launch of a new student loan verification service, and we're basically just helping you guys pay off your loans and working with employees and so on. And we're dedicated to helping people get their money right, and Secure 2.0 in the provision that makes it easier for companies to support all their employees. Financial well-being is a great example of that. So they're basically hitting their headlines with a new product launch, new tool launch, very, very smart to get in front of people's faces. I like it a lot. Now, none of this, of course, is financial advice, but let me show you a couple of things. I want to show you a trade idea. And also I put some charts and numbers into our community already. If you want to join that community, of course, you're super welcome to. It's like 50 cents a day. felixschwenzer.org/Patreon is the link. Link is also down below in the description. But let me show you, and I keep posting things in there, and so it's a marvelous community of people who want to get to financial freedom. This optionswatch.io is also a tool that we have developed and continue to develop, me with one of my mentees, a super smart ex-Twitter guy. And what you can do is it can help you visualize what a trade would look like. So I've selected SoFi here, and in the middle I get the stock chart, familiar to you. We're kind of just around the high of Feb 2023. And you could just buy SoFi, right? You have a 50-50 chance of it going up or down, but you're buying it near the top of a massive rally, so probably your downside is greater than your upside at this point. So what would I do instead? Well, I would make my break even be this gray line here. So I would make my break even line for my trade to be $6.83. And you're like, Felix, how can you buy stocks below the share price? Well, you can. Trading at almost $8, I'm $1.20 below. That's 12-15% below the share price. And we can do that with options, something called a bull put spread. And please don't just jump on this. If you don't understand this, you're going to lose money. It's a bad idea. You should get a paper trading account, learn, study, send me a message if you want to learn some more. I usually use 45-day trades. Don't stay in them for 45 days. It's also a bad idea. You're going to exit them early. So July 21st is what I'm looking at here. So this trade here has a 74% chance of profit. and would make me a 20% return if it works out the way I want. So why does it have a 74% chance of profit? Because the SoFi stock could go down to $6.80 in a bit, and I'm still okay. Or it can go up to the moon, and I'm still okay, and I'm making money. So for me, these are smarter trade setups than just running out and buying the stock, at least if you're a short-term kind of trader, investor. If you own this for the really long run, different story. You might just want to average into a position and over time and so on. But this right here, right now, probably doesn't scream necessarily buy. But the fundamental story certainly does. So you have to also always look at like what's short term, what's longer term. So longer term, I like the story a lot. I think they've done an incredible job of essentially surviving COVID and the student loan moratorium and the Biden administration. And yeah, it's an interesting one. I like it a lot. Doesn't mean you should. So let me know what you think about it down below, and hit the subscribe button if you want continued coverage of SoFi that's maybe a little bit more number-based and a bit more technical than some, for which I should apologize for, but no, I like it. I like looking at facts and numbers and what it actually means. So that's what the community here is really all about. And I want to thank you for watching, smashing the like button, and joining the beautiful community. Cheers.